Today's podcast is brought to you by Audible. Get a free audiobook download and 30-day free trial at audibletrial.com/smart crypto investing. That's www.audibletrial.com/smart crypto investing. Over 180,000 titles to choose from your iPhone, Android, Kindle, or MP3 player. Welcome to episode 5 of the Smart Crypto Investing Podcast. This is your host, Chuck Rivers. I want to thank you so much for tuning in today and joining me. Before we get into today's interview, just want to say thank you so much, everybody, for listening in. I know we're only 5 shows in, but I really hope the content has been helpful. You can check out some of the past shows we have in iTunes as well. I think the second episode, we talked about some of the terms and definitions that you'll hear in the cryptocurrency space, some important terms that when you start doing your studies. And last week we spoke with Kirill Ravenstrong, and we talked a little bit about the blockchain technology. And today, again, we're speaking with Stan Larimer. He is the CEO of Bitshares, and we talk a little bit about Bitshares and how Bitshares is slightly different, I would say, or I can say drastically different than some of the other companies out there, exchanges, and then also as far as from the coin perspective, how the coin differs from some of the other coins. So I really, really think you'll enjoy today's interview. It does get a bit technical, but we did try to keep it as foundational and fundamental as possible. So without further ado, let's go ahead and jump right into today's interview. And Stan, welcome to Smart Crypto Investing. Thanks for coming on today.
Hey, thank you for having me.
Awesome. So let's jump right into it, Stan. So tell us a little bit about your background and what it is that you do.
All right. Well, my background is 40 years in the aerospace industry doing unmanned air, ground, sea, and space vehicles. I retired in 2010. My son, Dan Larimer, who's the inventor of all of the technology we'll probably be talking about, called me out of retirement to run his company while he invented Bitshares and then went on to do Steemit and now working on EOS. So my job right now is to look after his firstborn Bitshares, which is what I do.
Awesome. Now, for anybody that's new to the cryptocurrency world, and it seems over the past month it's just hitting everywhere. Can you tell us a little bit about Bitshares? I know there's different exchanges, but so tell us a little bit about Bitshares and particularly what makes it, I guess, particularly different than, I would say, like a Bittrex or Coinbase.
Okay, well, Bitshares is one of the big 4 blockchains out there, along with Bitcoin, Ethereum, and Steemit, 2 of which are Dan's products, and that's Bitshares and Steemit. And that particular product is running over half of the total transactions in the entire world today. So Bitshares is a smart coin factory and a decentralized exchange, whereas Bitcoin, the one everyone's heard about, is a single coin. So if you wanted to compare the two head to head, both of them could be thought of as companies. The Bitcoin company provides one service to keep track of who owns its coins, and Bitshares is a company that keeps track of hundreds of coins, all different types of smart coins of different types. And it's also got an exchange that will allow you to trade all those different coins and assets against each other.
Okay. So, and you probably hinted at it, when you gave your introduction, but what got you into cryptocurrency?
Well, it was just something I was asked to do as someone that Dan could trust to run his company. But I got totally hooked on it. I started in 2013, and have since sort of evolved into a bit of a advocate. I don't run the Bitshares company. That's an unmanned company, just like Bitcoin, and it's run by its owners who vote for people to do services like running nodes or maintaining the software and so on. But I have gotten into it because I passionately believe in decentralizing everything. I think I'm sort of like Thomas Jefferson, who always was in favor of pushing power away from centralization down to the states. Hamilton wanted to pull it all back to a centralized federal government type of thing. And so those forces have been going on for a long time, and I'm siding with Thomas Jefferson.
And so now you're the CEO of Cryptonomics, and that's is that like a blockchain development project, or is that accurate?
Yeah, Dan and I and a bunch of other people formed Cryptonomics after developing the first version of Bitshares. And so a group of developers working on sweat equity formed Cryptonomics to make the next version, which is what is the real-time blockchain we see today, used in so many different places. And so Cryptonomics was founded first and foremost to produce that. And then since that time, Cryptonomics has been in the process of spinning off other companies to do different things. We believe in decentralization even of ourselves. And so spun off Steemit, which is now run by Ned Scott and is a totally independent company. And we're just in the process of spinning off another one known as Hyperion, which is providing services to help lots of companies jump on the blockchain and learn how to use a real-time system, providing the services that would be hard for a company to learn how to do itself, and giving them best-in-class customer support.
Now, what's your take on ICOs? When I first got into cryptocurrency myself, I was really gung-ho on ICOs, and like, oh wow, there's opportunities. But then as I started doing more research and I started looking at some of these ICOs, I started to rethink it. So I just wanted to get your take, being that you're in the industry and your background. So what's your overall take on ICOs?
Well, it was the best of times and it was the worst of times, I guess is what I would say. It's a tremendous, wonderful opportunity when done right, and it's the bane of the industry if it's done wrong. The really good quality ICOs that are done by the book and kept legal and regulatory compliant are going to be wonderful things if we can avoid regulation to the point where they're just as hard to do as a normal stock offering or something. That's the big threat, is that regulators will get over-engaged in it, but it's clear we need some regulations because people are taking advantage of other people offering absolute garbage. And the offering of that garbage is going to have a very chilling effect on our ability to remain free of undue regulation. It's an excuse for over-regulation. And so, I'm simultaneously advocating self-regulation of the industry with the txsrb.org. That's the token exchange self-regulating body. It's intended to work with the SEC, but regulating the industry just like the SEC was designed to regulate its industry. Mm-hmm. And so I think that we'll have to do a lot of that, and I'm involved in a number of advising companies on how to do proper ICOs that meet the regulatory restrictions. So I think we'll come out of it okay, but it's going to be an awfully chaotic 2018.
Yeah, I agree. So what is like a piece of advice for people who are just getting into cryptocurrency, and people particularly who are looking at ICOs? What are some telltale signs that they should look out for when they're researching a particular project on whether or not they should invest in it?
Well, there's no substitute for doing due diligence. I mean, people who get involved in this tend to be, a lot of them just want to jump on and trade. They're inexperienced at trading. They're newly wealthy because maybe they got lucky on one coin, and now they want to invest in other things. That's fine, but there's just no substitute for studying who's behind the thing, understanding the people that are doing it, see what their track record is, read their white paper, and check to see that they have done the necessary diligence in terms of being regulatory compliant. Worst thing you could do is buy a non-compliant token that gets seized and the people who you funded thrown in jail for not having done it right.
Yeah.
So, you got to watch out for all that kind of stuff. It's even true with Bitcoin. I'd say most people have no clue why they're buying Bitcoin except that it's going up.
Yeah.
And, Bitcoin is nice. I really respect the guys that developed it, but it's the Model T. And, we've got Teslas these days. And if you're investing in a Model T just because it's the biggest, most well-known thing, then you're just asking for a fall when Bitcoin starts settling into its natural place, which is a reserve currency and something that everything else is priced in, but not a medium of exchange. It's too slow for that. It's already clogged up to the point where it's got a huge backlog. You got to pay almost as much as it costs to wire money in a bank, and it's going to get more and more like that. So why are you investing in Bitcoin? Well, it's going to probably go up and down a lot between here. And if you're an experienced investor, there's reasons why you might want to invest in it. But if you haven't studied the difference between Bitcoin and Bitshares, for example, you're not an informed investor.
Yeah. Yeah. And just because, so my next question, I had to just put a disclaimer in there, and we have a disclaimer in the show notes, but for all our listeners, just know that this is not an investment advice. We're not making any recommendations. It's just for educational purposes. And so you're actually right, because the other day I transferred some Bitcoin from Coinbase over into Bittrex, and also transferred Litecoin over from Coinbase into Bittrex. And the fee that I was charged from transferring the Bitcoin to Bittrex was astronomical. I'm like, this is crazy. And then when I did it for Litecoin, it not only was the fee a lot cheaper, it went through immediately.
Yeah, that particular network sits where it's not as heavily loaded.
Yeah.
And so, that's an advantage. But keep in mind, you could do that same transfer on Bitshares for 3 cents in 3 seconds. So once again, when we go talking to CEOs of different companies, and there's hundreds of them out there that are adopting a blockchain for their business processes, the first thing I ask them is how many transactions per second do you think you're going to do with your new service that you're offering, whatever it might be. They say, oh man, we got millions of customers. We'll probably be doing thousands of transactions per second. I said, do you realize that Bitcoin can maybe do 7 transactions per second shared by the whole world? Ethereum can maybe do 25 best case, and you yourself are planning thousands. And when they hear that, you can see their face goes pale. And then they usually switch to a real-time chain like Bitshares.
Okay. And actually, it's funny. I heard of Bitshares prior to, speaking with you, and on the last episode we spoke with Kirill. But prior to that, I just didn't really hear about Bitshares. And then when I spoke to Kirill on the last episode, and now speaking with you, I may actually look into Bitshares, because my philosophy is I don't like having 4 or 5 different exchanges where the coins are scattered. Like my personal philosophy is just having at least 1 or 2 central locations. And it sounds like Bitshares is a step above some of the other exchanges.
Well, the big difference between a decentralized exchange and the typical exchange, which is centralized, is that with Bitshares, you keep your keys to your assets all locked up safely in your wallet. Whereas to use another exchange, you got to send them physical control of your coin, whether it's a Bitcoin or a Bitshares, whatever you send over to them. They've got your coins now. All you've got is an IOU from them that they will allow you to refund that back to your wallet when you're done trading. But the whole time you're trading, you're playing with house poker chips. Mm-hmm. And then when you want to cash out, you can send it back. Now, that's fine if it's going to be over there just for a short trade. But if you're leaving it parked on that central exchange, you're creating, along with everybody else that uses that exchange, a honeypot that hackers are going to be trying to get into, because that's where all the money is. They're not going to try to hack your personal computer. There's not enough money in it. But there is enough money in one of these big exchanges. And so that's why you hear about these exchanges getting hacked. And it's not that they're not trying to do good, but there's lots of ways to hack. Talking to an exchange employee, penetrating through all kinds of sophisticated tricks in order to get at that honeypot. And of course, once the honeypot's gone, the exchange is insolvent, and your chances of seeing your money again are gone. So the big advantage